Welcome to Vector News 24. I'm John, and this is our live update on the New York Stock Exchange for Tuesday, April 14, 2026. Right now, at 11:15 a.m. New York time, the NYSE is in the middle of its regular trading session, and we're seeing how yesterday's sharp move in oil prices and geopolitical tension is playing out in today's action. We'll walk through the key levels the market is watching, highlight what's moving in major sectors, and break down what this means for traders and long-term investors. As of 11:15 a.m. Eastern, the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite are trading mixed to slightly lower, recovering off the worst overnight levels, but still under pressure compared to Friday's close. Yesterday's risk-off mood carried over into today's open, with oil still elevated above $100 a barrel and headlines around the Strait of Hormuz keeping energy and financial stocks on the defensive. However, intraday buying has appeared in large-cap tech and some cyclical names, suggesting that not all investors are running for the exits just yet. Key things to watch right now: whether the market can hold yesterday's intraday lows as support, or if we see a fresh leg down. How volume builds through the afternoon, since higher participation tends to confirm the direction of the trend. Any headlines on oil, geopolitics, or major corporate announcements that can suddenly shift sentiment. On the sector front, energy stocks are still reacting to the oil spike, with some exploration and refining names higher, while integrated majors are more mixed as higher costs also weigh on margins. Banks and other financials are under pressure again today, as traders worry that higher oil-driven inflation could keep the Federal Reserve in a more cautious or even hawkish stance. Treasuries are modestly higher, with the 10-year yield ticking up, reflecting that the market is still pricing in elevated risk. On the tech side, the Nasdaq 100 heavyweights are acting as a partial counterbalance. A relief bounce in big tech is helping the index limit its losses and giving some traders the chance to selectively add exposure at lower levels. If you're watching individual names, keep an eye on energy-related plays, major banks, and any companies that have overhyped headlines or earnings news over the last 24 hours, because they tend to be the most volatile in this kind of environment. Today's trading is being shaped by three main themes. First, oil prices and geopolitics. The market is trying to price in the risk that the situation in the Middle East stays tense, which keeps energy volatility elevated and makes investors more cautious about growth-sensitive sectors. Second, the macro backdrop. With the U.S. Producer Price Index report due soon, the market is in a holding pattern, waiting for more data on whether inflation pressures are broadening out again. Any upside surprise in PPI could push the narrative back toward stickier inflation, which would be another headwind for equities. Third, positioning and sentiment. After a strong run-up in recent months, many investors are already stretched long, so a negative shock like an oil spike can trigger quick profit-taking and short-term selling. That's why you're seeing the intraday swings we're seeing today. For the remainder of the April 14th session, focus on these points. Can the S&P 500 and Nasdaq defend the session's lows and close above yesterday's close? If so, that would be a constructive sign that today's move is more of a pullback than a breakdown. Watch the opening and reaction in Asia, especially Japan's Nikkei 225 in the evening session. Any strong move there can influence tomorrow's NYSE Open. Keep an eye on any surprise corporate news, especially from financials, energy, or big tech, since those can drive short-term price action. Also, check how the VIX and related volatility measures are behaving. If fear spikes, it can accelerate selling. If it starts to ease, it could signal that traders are beginning to step back in. That's your midday update from the NYSE on April 14, 2026. Markets are still digesting yesterday's oil-driven sell-off, and the direction of the rest of the session will depend heavily on how equities hold key support levels, the tone of macro data coming up, and whether any new headlines change the risk picture before the close. If you found this breakdown helpful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily updates. We're here to break down the stock market, economic data, and global news in clear, no-hype language. Leave a comment below with your question. Are you using this dip as a buying opportunity or staying on the sidelines? We'll bring some of your ideas into our next analysis. Thanks for watching Vector News 24. Until next time, this is Your Name, signing off.